following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Develop Your Edge with Anthony Crudele. I'm your host, Tom Schneider, CMT, and happy to bring back Anthony Crudele. How you doing, Anthony?
I'm doing great, Tom. Fun discussion today. Actually, a perfect day to go over keeping your losses small. Obviously in this volatility, we're all trying to manage it, and we all always want to keep our losses small. And there's really two ways that we can do that. Is obviously we can just take our risk down. We could take it down by contract size, or we could take it down by distance of stop, right? Or a combination of the two. Today, I'm going to go over some techniques in the dome and how once I find a direction that I want to be in, how I can keep my losses pretty small and under control.
That's great. Jim and I touched on this on the previous segment. We were talking about you, of course, and the topic. And one thing that I just see, constantly is when you see traders talk about what makes them successful. When you talk about longtime experienced traders, they really all have this idea of keeping your losses small. Risk management is probably the number one answer. They could throw in other things, but it's really about keeping your losses small. It keeps you coming back.
Yeah, I mean, 100%. And the thing is, I think that there's a couple negatives that can come with that thought process. One is you can easily become an overtrader, and then you end up just churning yourself, with fees, commissions, all that stuff, right? And then you end up just blowing your account. You're like, wow, I've been keeping my losses small, but I'm over trading. Okay, so that's like the first mistake that most people make. The second one is people become very binary with execution, is that they think, okay, I'm just going to trade a one lot. And I'm going to trade a one lot, I'll widen my stop. And they think they're actually reducing risk, but ultimately they're taking the same amount of risk when they actually are now under trading, right? And so there's that balance. Right. And I always look at it like this, is that the simple thing I want everyone to think about today when I'm going about showing some stuff on the dome is, if you believe the trend is up and you want to be long, you want to buy at and above support to get in, and you want to keep your stops really tight to that level. So think about that. If you're bullish and you're buying support in an uptrend, you want to buy at and above your areas, and you want to keep your stops relatively tight to that level of support. Because in most bull markets, especially intraday trend days, the markets never go back and fully give you the support area that you want. And if they do, a lot of times you can have a relatively tight stop on that day, because the market should not get through it. And so therefore you can manage risk a little bit tighter and actually be a little bit more aggressive with position sizing, because you can be within a tighter stop. Now the vice versa goes, which what we're going to look for today. Market's been trending down as of late. In the short term, the trend is relatively down. I mean, we could almost say it's sideways, but let's just say it's down. And you want to be bearish on a day like today, which I am, and I'll explain why when we get to the charts. If I want to sell rallies, I want to sell at and below my areas. I want to keep my stops tight above resistance. Why? Because if all of a sudden the short stop working, why do I want to give that short a lot of room? I don't want to give it a lot of room. I want to keep it relatively tight. And because I think the trend is down, when it gets near the prices of interest, I'm going to come in and I'm going to step in relatively quickly right at the test or just before the test to start getting my way into that position. And so to me, that is, just a simple thought process we have when we come in, when we try to minimize losses.
Yeah, that makes sense. You buy strength, you sell weakness, and you do it on the right side, not the wrong side of that demarcation line, so to speak. And if the forces are the way you think they are, the stops shouldn't really get hit, right?
Exactly. Yeah. Right. I mean, everybody knows the areas that you wanted to get in and you waited and you stayed patient in a bull trend or a bear trend, and the market never got there and the market ran without you. And next thing you know, you end up buying near the high, or next thing you know, you're fading the move and you're doing, everything wrong in the book. And it's really because at that time, you were not willing to just step in with a small position, take on a small amount of risk, and just actually, I call them a lot of times feelers, where you can get in and just feel like, okay, look at, they're not getting to my area, but I'm small. This is where micros are really great for this. Because you can now spread out your execution versus being just held by a single price or a single couple of prices. And that's extremely important. And I carry that mindset with me all the time. That is why I am really more of a directional trader than anything. If people had to ask me how I approach the markets, I would say that, I'm more of an intraday swing type trader, and I'm very directional. So once I find a direction that I like, I try to stay in that direction, and I try to find the best way to execute in that direction. Very seldom, very rarely am I a two-way tape trader. And the reason is because then I'm exposing myself to too many different loss opportunities versus win opportunities, right? I mean, the reason why I believe that being more on one side is a much better path for me is because I can really hone in and wait just for the support or resistance levels. And when they get there, I could be hyper focused on just the execution of that trade. So basically, I can get really good at trading that one trade and that one direction, and I can manage my risk really well. So even if I'm wrong in that direction for that day, there's a lot of times I'll break even, lose a little, or even make a little, even though technically it didn't work out for me. And that is really the key when you think about managing risk. It's not just about, putting in a tight stop. It's not just about losing less. It's about maximizing risk. So everyone talks about, managing risk, but it's really about maximizing risk, and it's about maximizing opportunities.
Well, it goes back to your big, small, or not at all, right? It's knowing when to go big and when not to go big.
Exactly.
Yeah.
And so let's pull up the chart, because let's start with that mindset. Right, Tom? So we talked about it. I said, if you're bullish or if you're bearish, you're going to have a thought process going into the day to how do you execute.
Right.
Overall, right now, I mean, I've been writing in my free note every morning that really we're a two-way tape. The past couple of days, I think the action's confirming that. Really, you're vulnerable on both sides right now, unfortunately. The market is showing a lot of volatility, and some traders will really thrive in this, and some people might just overtrade it or get chopped up. But what you have to do, what I think is an important aspect of when you're coming into day trade, is find the side that you feel more confident in and really execute that side as best as you can. Just get really good at executing that one direction, even though it may be a two-way tape. So if I were to come in today and analyze this market, I think just generally looking at the chart, I'm going to say two-way tape. But for today, I'm going to look at the action, and I'm going to say, I want to be a seller, not a buyer. And the reason is when you look at the daily, there's a couple things going on. So what's going to set the tone for me? These are monthly VWAPs. And I look at this all the time. I've talked about this. The red lines are the monthly VWAPs. And you can see that we are really going up and retesting VWAPs on a daily basis, and they're pretty much highs. And very few of them, if any, are lows, right?
Right.
And you're not going down and testing any VWAP and it's being a low.
Right.
And the VWAP is talked about a lot more now than it ever really has been. And I always say this, when you're looking at a VWAP, all it's giving you is the bias of what side is winning the battle. And so you don't need to look at it like, oh, I got to wait to sell the VWAP or buy the VWAP, or that's like the most important part of the market. What it shows you is the volume weighted average price and where the market is spending more time above or below, and where the reactions are coming based upon that volume weighted average price. And right now it's coming below the market. So as an intraday trader, when you look at VWAPs on a wider time frame, they can help you determine a bias of direction like we are right now. So this one's VWAP, we're below it, comes in right at 50, 66, 65. Also, if you look at my 30% level on my Bollinger Bands, it's right around 65. It says 63 here, just because my fib's off a little bit.
Right.
But it's 65-ish. So I know that 50, 65 is a key area. 50, 90, I also wrote in my morning note. That's the year-to-date VWAP, and it's also last month's VWAP. It's a key area. Look at the overnight high. You scroll up here. all the way up. What was the overnight high? Oh boy, I can't believe it. It was the monthly VWAP and the year-to-date VWAP. So the market's responding very well to resistance. So I want to be a seller. So right away, my mindset is I want to wait for the rallies to come in, and I want to sell at or below my areas, and I want to keep my stops relatively tight to areas of resistance because the probability is lower today. Okay.
Yep.
So what I want to pull up next is this chart that we have not talked a lot about, but I've been using it more and more. And I really like it because it gives us the inside look of the candle. So this is a volumetric chart. You need to have your order flow package on Ninja in order to use it. But it's really a valuable tool. And I think it's really a justified spend if you are a day trader because you get a look inside the candle. Right. And there's some really great guys out there, Order Flow Labs, other people out there that are using order flow tools that are laid on Ninja that I think are really, really great. And they can really help you get a deep dive look inside of what's happening in order flow. And I think when you have two-way tapes and you have volatile markets, order flow is really going to be one of your best friends because you're going to watch the reactions to areas within the candles to be able to identify what's happening in that candle at support or resistance. So first thing that we're going to look at is you have the VWAP. So what's interesting about today is, and I was hoping this was going to happen when we were online, was 50.66. If you go back to my daily homework, what did I say? 50.66, 65 is resistance.
Right.
50, you got the monthly VWAP, and then you have today's VWAP. Wow, it's like the triple VWAP, right? It's like the triple Lindy. Remember, that's what came to mind. I do a lot of these movie references, and I wonder if people catch on to them. But remember the triple Lindy with Rodney Dangerfield?
Rodney Dangerfield, right? Yeah,
the greatest. If you don't know the triple Lindy,
back to school.
I don't know what to, back to school, baby.
Right.
Just so we have the triple VWAP today. So when we look at that, what do we want to see, right? When we get to a VWAP or we get to any areas of importance, and I'm using VWAPs because everybody could understand that, and I use them and I like them. When we get to that area, what do I want to see? I want to see buying come in and failure to push above.
And we see that right away, right? I mean, it's like staring you in the face here.
Staring you in the face. When you look at this right here, so what is this volumetric bar within the candle? On the right side, it's just showing you the net deltas. Is there more bought at a price or is there more sold at a price? And at the bottom, you have the delta bar. So it's the cumulative delta of that bar. So you had 1,300 net buys in E-mini S&P on a push higher, right to an area of resistance. And the market immediately got below it. And the buying was coming in right here, right? And you wonder, you're like, what's happening here is either people are over anticipating that the market's going to push through it and there's a squeeze, or you're running stops. The why doesn't matter, but the what is what matters. And what's happening is there's buying at and above the VWAP with no ability to push through it.
Right.
That's extremely important. And what happens when we get below it? You see red bars come in and you see a red candle. And now you have an area where the selling comes in and now the selling is building. And so what's happening is the sellers are coming in and they are hitting bids because of a failure. So the longs are either unraveling or there's new sellers coming in. The why doesn't matter, the what does. And so what happens is in these areas, when we get up to this price action, the way you want to look at it, and I have this up on Sim because I was hoping to do some live stuff when we got here, and I don't want to be putting on full E-minis and not be focusing on that. But just for example, when we were to get up to that area, the way I would look at it is, and maybe we'll get some area when we look for a short in a second. But if 65, 66 was your area, what you want to look for is when we get up there, you want to do things like sell one, get filled, sell one, get filled, watch the reaction, market starts to come down, sell one, get filled, put my 3-lot buy stop up above the market, right?
Yep.
And so that's the way, that's a technique I would look at when we get there. And I would use a relatively tight stop. Now, the reason why I would be able to use, and I'm using threes because I always say I like to get in increments of 3. So if it's a 9-lot, if it's a 27-lot, doesn't matter. I'm going to get in at 3 execution points.
Right.
And so the reason why I do this and show that I would have added later at 63.5 is my first 2 sells would have been right on the initial test. Then once the market were to start to push back below here and get below here, and I'd see sellers come in, I'd sell another one, and then I would put a stop relatively tight. So at this point, I'm going to be in a full position with really a very tight amount of risk. Very tight amount.
Right.
And no, so this is a way for me to keep a loss really small, because instead of me just selling, saying, oh, I'm going to sell 65s with, let's just say, you know, a 71 stop, because you're going to give it enough room. Well, why do that?
Right.
Once I see this rotation off of here, I want to hit the bid.
Yeah.
Because now I'm going to catch that quick turn. And as it goes, you know, you trail your stop. So I'm going to hoping, well, we got 12 minutes left. We're actually getting a rally up here. So let's look at this right here. This was a high volume node, and there were some sellers at 60 even, right? And this bar was kind of the bar where we turned around. So let's just say hypothetically, this is not something, I'm doing this for pure example's sake. This is not a trade that I'm saying to go out and do, just to be clear. I'm doing this to be able to show repetition, right? Because in my 30-minute time frame on here, it's not going to be able to pick it perfectly. So I want to lean on one of these bars highs, because I think the market's going to continue to rotate lower. So what I want to watch for is buyers to come up to where these sellers were and fail to get above it. So you see this high volume node right here where the buyers are trying to come in at 57.75 up to basic 60. So I'm going to look at it from this perspective. I'm going to say, look, if I'm committed, I know I want to sell up to 60, because I think this high volume node in this sell area is going to continue to be resistance. So this is where I think sellers are going to come in. So let's hope and maybe we get an area up here where we can do it. So 57.75, you see buyers keep trying to come in. They can't really push above it. Maybe they squeak them up to 60. What I'll look for is I'll do something like this. I'll be like, all right, I'm going to sell one at 9.5 and see if I get it. Now my stop, let's just say for this purpose, is going to be probably 64.75. So I got filled on one.
Right.
At 60 even, I'm going to watch it. I'm going to watch and see how it goes. I know that this is a high volume node, and I know that this bar matters. So as I watch it, is it hitting? Is it hitting? I'll work the offer again. Let's see if I get them. Right. And I'm patient with this. Okay, I got two. I know I'm going to get in three. My third one, I'm probably going to look to see maybe they squeeze them back up to the top of this candle, 61, 62. My stop immediately, I'm going to put in, let's just say 65. That's what my risk is. I'm going to risk $5 here. But I'm going to try to get to a full position as fast as I can. Because I know that this area, if there's going to be a response, I'm going to wait and watch. Buyers are coming in. They pushed around these old high volume nodes. It's just a 3-minute chart. And I'm watching them not progress higher. But I'm not solely convinced at this point to get into the full and final leg of it. And the reason is because maybe I get a possibility to sell 2 quarters, 2 halves. So I'm selling the rally, and I'm selling where the buyers are coming in, and I'm looking for the rotations back down. Now, back down here, the sellers are coming back in, and I'll look to see, can they continue to do what they did back here? Or is this just going to be kind of a choppy area within the tape? And I'll look at it and I'll say, look, I know I'm going to risk roughly $5. So my initial thought is, if I can get $5 a rotation at 55, I'm going to cover one and I'm going to stay with one. I'm going to try to rotate in and out of it. And so this is what I'll continue to do. I'll put risk on, I'll take risk off. And as they get to my areas, I'll be aggressive quick in, and then I'll rotate out of them. So I'll try to get a 1-to-1 roughly on half the position. Part of the reason why I always want to get to at least 2 or half of my position or a third of my position early on is so I can rotate out of one,
Right.
Or a third of it,
Right.
or a half of it. I want to be able to rotate out of something. This goes back to my thought process of, when you get binary and just say, I'm going to trade smaller just with a 1-to-1 lot, I can't get out of some. I'm stuck.
Right.
You know,
Now, what's interesting here is last time we saw a peak high going back to that 65 level, let's say, we did see a lot of buyers come in, 2 consecutive candles and no progression. Here it's looking kind of the same, right? We've got a smaller peak high, which is bearish. You've got buyers at the top. They're getting squeezed, right? Because if you were a buyer there, you're hoping it goes on, meeting new heights, and you're not there. The market's not advancing, so you might start to panic. You might start to say, "Well, you know what? This is, maybe I'll turn around and go with the flow, or get out because I'm down," and that just puts more selling pressure if that's the way it goes.
exactly. Right. I mean, people got to understand that why order flow tools are great is because it shows you at the moment. So like, you would say, well, why wouldn't I want to be a buyer here if there's more net buying on this side with the net delta? You can see they bought 1,026 off this low. Well, because you've committed to that one side of I want to sell the rally. And so you want to see where the buyers are exhausted and where they run out of gas, and you see that the volume is picked up on the buy side and then it can't push above it. So like right now, this is a very clear area of where I probably don't want to sell above here now. Because if they get above where these buyers stepped in, they might squeeze them higher. So now I'm going to look at this and I'm going to play a little defense. I'm going to show you something that I would look at. Because the buyers came in really at 60 even, 60 quarter, I won't sell anymore here. If they start to push above this, I'll cover this position. I'll wait to see what it does at VWAP. But if it stays below there and they push and they try to buy and can't get above it and it comes back down, I'll hit the bid.
Got it.
Okay. Because to me, this is the area, this is a little squeeze area, right? Buyers strong off the low, try to bid it. Now I'm actually in a place where at worst, I'm going to lose a few ticks on these. I'm not going to get killed on them, right? I have my stop way up there in case it blows out. But if it starts going 61 bid and they're above these buyers and I see buyers coming in, likelihood we go back up to the VWAP.
Yeah.
Right. And so you got to be smart about it. This is about keeping your losses small, right? And so if I'm a scalper, if I'm intraday trading, this is how I approach it. Get to my area, one in. Oh, it's going my way. Rotate one out, adjust my stop. Like now I know this area is a squeeze. I don't want to and manually I'll cover these. I maybe not put my stop there because it might just blip up to one even and one tick me, which I don't want to happen. So I'll leave my stop where it is. But if it gets up there and it starts going even a quarter bit, I'll probably buy one back and wait to see. I mean, that's trading, right? You're massaging the position, but I'm committed to this side and I'm only focused on that. So many people think too much within the tape. I want to be long. I want to be short. And they're just nonstop. In this market, it really is a two-way tape. You're going to get opportunities on both sides. If you want to be long, you're going to find opportunities to buy breaks. If you want to be short, you're going to find opportunities to be short.
Right.
Days may seem long, but they're really short in time. Give yourself time, and focus on that one trade so you can stay confident and hone in on the execution of that side.
Yeah, I just keep coming to this idea that the buyers come in and this market turns around, right? I mean, this is not a market, and this is kind of consistent with two-way tape, right? This is not a breakout market. This is not something where buyers are coming in and pushing this market up. It just seems that there's and it might be just because you've seen what other people have seen what you've seen, which is you're bearish on this day, you're looking for places to go short. And the buyers are just not enough to disprove what you're seeing.
I mean, the proof is in the tape, right? And this is another reason why the order flow helps us, because as great as our analysis can be, if you could see within the candle, within the bar, it helps you become a better executor. And at the end of the day, it doesn't matter what strategy you have. Volume, order flow, VWAPs, these types of things can really just help accentuate your own strategy, right? They can be your strategy or they can help your strategy. No matter what happens or what you look at, the goal is always obviously keep losses small, like we're focusing on today, manage your risk, but maximize your risk, maximize your potential in your strategy. Most traders out there probably have pretty good strategies, but they haven't given the strategy enough time to really become a good executor of it. They just haven't. They haven't seen enough cycles. They haven't seen enough change. I've been there. You go down the rabbit hole of like, I finally found something. I'm going to buy one back, just to show what I would do. You've gone down the rabbit hole of like, this works great. You go in every day. Wow, I can't believe, why isn't everybody trading fibs? I buy the 382 or I sell the 50% and I'm killing it. And then all of a sudden for months, it doesn't work. And you're like, oh my God, I don't understand what happened. Well, it's because you didn't realize that the bigger environment and what was happening. Do your homework, get better at executing in the short term, right? And this is why I always say, hone in on just one side and one type of strategy. So like for me now, you look at it, see the buyers came in and accelerated here, right? And I'll just look them a cover. I mean, we're done with our segment anyway today. I know we're out of time. But the point of it is, look how small I kept that. I could have easily scratched that trade if I wanted to. But the point of it is like, I sold it when I saw the response. I waited for it. I gave it an opportunity. The sellers came in down here. It didn't accelerate lower. I said, that's an area of interest. If it pushes above it, I'll scratch it. Maybe it goes to the VWAP. I wait for a segment here. If we were back in this time earlier, this is the area I would have really loved. And I would have hit that bid, and you would have gotten the rotation. But the key is keep your losses small, stay in the game. Don't overtrade this market. It will crush you. Stay patient. There's going to be tons of opportunities. You're probably going to end up trading more anyway because the opportunities are going to be there more, but don't hold on to losers. And hopefully today's segment helped you understand just really the basics of how to rotate in and out of positions, minimize risk, but also maximize opportunity.
That's great. That's a great point about the balance between minimizing your losers, but trying to maximize your winners as well. What else do we have to talk about? I think there's probably one more thing, right?
I just want to mention to everybody, because I continue to see people trading more and more about commodities. CME Group has a commodities challenge. You could step into commodities. You can find this link in my YouTube description. I'll also post this in my Discord. It starts Sunday, May 12th. Commodities. I've said this before in the show time. We did a show on commodities, and the whole point of doing a show on commodities here, I know a lot of people don't trade them, but more and more people are getting involved in them. It might even be a better product for you. You might be a better corn or wheat trader than you are a NASDAQ trader. This is a great opportunity to try it, and you get cash prizes. And so, go out there, try it, and learn about these products. So you can find more about that at cmegroup.com. Like I said, the link will be in my YouTube description and Discord as well.
Yeah, the CME had some great challenges last year. I participated in those, and they were fun and really made you think. I was waiting for the next challenge, and finally it's here in May. I'm going to be participating with my son who's in college, and can't wait. So thanks for that, Anthony.
You got it. And thank you everybody for tuning in today. Hopefully this helped you minimize risk, get better at handling losses and just learning rotations, basic rotations as an intraday trader.
Awesome. Thanks so much, Anthony. We'll do this again next week.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.